LLP IRS Medic, and I have a pretty big update for today. The IRS ended the OVDP program on September 28th of this year, and we've known that for a while, so we've been speculating exactly what is the IRS going to do. With no program in place, we were sort of stuck with the old rules that you basically just submit a voluntary disclosure to get rid of criminal exposure, and then sort of let's see what the IRS will do on civil examinations. But now we have some clarity. A memorandum written on November 20th, 2018. Blog if you want to see the PDF that was there. Here it is in text format up here on the site. So just follow that link in the description below. Some of the interesting things that we see are that there's not really this set in stone penalty structure. We really have a lot of discretion by the IRS. So I'm going to run through the new procedures for OVDP. Again, we're only talking about those who need full protection. This does not apply to the streamline rules. Those have not changed. Those were announced in 2014. Pretty much have stayed the same since then. The IRS has not said that they're going to close that down. At any point, they mention it in passing that at some point it might end, which kind of makes sense. So this is how the 2018 OVDP will now work. You send an initial preclearance you send that to IRS Criminal Investigations. And after the preclearance is granted, and by the way, this is true if you're making a voluntary disclosure for just domestic stuff too. The processes are very, very similar. So you send a preclearance to IRS Criminal Investigation. They'll look at it to make sure, see if you're under examination or audit or somebody that they want to allow into an OVDP. Now, something to understand is if you have a legal source income or somebody who's a little notorious for doing other things, they might not let you into the OVDP, or it could just be a mistake. And sometimes we've been able to get people into an OVDP even when their preclearance was rejected. And actually, we had a case where a preclearance was rejected, but we submitted a streamline and everything went fine. So once your preclearance is granted, you'll need to fill out a form 14457, and that needs to be accepted by IRS Criminal Investigations. And then that form, you're really going to say, okay, what happened? Who was involved? Because the criminal investigation wants to know, hey, who else can we go after? That's really what they're looking for, is data. And through these previous programs, the IRS has a big list of people to get to. They just don't have the staff to get to everybody at the same time. And the truth be known, some people have escaped some things with the statute of limitations. The IRS doesn't like that so much, and they come pretty aggressively. So once your case is accepted by IRS Criminal Investigation, if it's not, sometimes we're able to work with that. And there's other strategies if you get rejected. It goes to the Large Business and International Group in Austin, Texas. Then Austin, Texas will assign that case to a civil OVDP and examiner to commence an audit. These examiners could be anywhere. They could be local to you, or they could be remote. We deal with offices all around the country. We have. Now, here's something that's really interesting. I found this very interesting because it was something I noted with no program in place, that the standard voluntary disclosure program includes a 6-year look-back period. But we know that the 2014 OVDP and the 2011 and the 2012 also had an 8-year look-back period, and the IRS wanted to get those 2 extra years. So that's gone now. So now it's only a 6-year look-back period, which is sort of beneficial because there's less tax returns you have to do, less taxes you have to pay. That's pretty good. And interest runs on those 8 years that could really add up. However, like most of all of these procedures announced in this memorandum, the IRS says, well, we kind of have discretion to do what we want to do. So they say they will extend the look-back period in certain cases. And what that means is probably if your income was really a little bit further back and you had no income in the last 6 years, the IRS might look to punish you something. That's what I would expect to see. Now, instead of that 27.5% penalty that was on your offshore asset base, which is sort of a complicated thing and it doesn't really apply anymore, we don't really have to get into that anymore, there's a 75% civil fraud penalty, and that's assessed. But now it's not assessed on any account values. Rather, it's assessed on what the tax you owe is. So this could be very beneficial because when we're talking about your offshore penalty base of that 27.5%, that was related to account value. You could have an account that didn't make any money or lost money and still have to pay a massive penalty. Now, for a 75% civil fraud penalty applied, there had to be some unreported tax. It's only going to be for 1 year, and there will be interest on that. So just sort of estimate that whatever your tax liability is, to double it, and that's what you owe. However, the IRS, unfortunately, is not ending there. There is FBAR penalties that the IRS examiner is going to be interested in. FBAR examinations are really something. FBAR penalties are really complicated to get right. And now what's interesting in the guidance of the memorandum, the IRS says, look at this. Look at this. The guidance mentions nothing about non-willful penalties, and I think that's something that we'll probably see some clarification on. I'm pretty sure they'll be interested in assessing non-willful penalties if they can't assess them. And we have a lot of Form 8938, Form 5472, Form 926, Form 8865. They're not going to be automatically assessed, and this is a good thing because I'll tell you, when you file these late, and you'll go through a program, chances are you're going to get that automatic assessment, and it's $10,000 on these forms, and they could go higher. Well, not automatically, but the automatic assessment is $10,000 per entity per year. We've had cases where clients, maybe their offshore bank account wasn't all that much, and we had some really fantastic FBAR mitigation to apply, so the FBAR penalties were small, but where they got hammered were on having multiple Form 5471s for years. Form 5471 is a required form for shareholders of foreign corporations. It's a very elaborate form, very complicated, and it could really add up. If you're a shareholder in 3 different foreign corporations, which is actually not that hard to do, especially when you have related entities, you 3 years would be $30,000, and if the IRS is going to audit you for 6 years, three times 6 is $180,000. And so we'd have situations where we did really good on the FBARs, but these informational returns were something we kind of have to balance out when we were looking to opt out to lower taxes to avoid that 27.5% penalty. So we're going to see how this plays out. It will be interesting to see if the IRS will take a little bit more reasonable approach to the non-filing of these returns. The other thing, too, is the IRS will wrap up other taxes involved, like your excise taxes, and that's something that has a premium tax that has to be paid, and very few people know you have to do that, too, so this could wrap that up, too. And I think one of the important things here, too, is that the IRS Office of Appeals is open. Your rights there are intact, and look, we've had a lot of success with IRS Office of Appeals. Their goal is really to see, how is this case going to play out in court? Will the IRS prevail? And so that's sort of our intermediary. But even if we don't succeed with appeals, there's still additional negotiations if the case goes out for collections on FBAR penalties if there is a district court case there that somebody wants to go. We'll be discussing these changes along with our friend Dennis Brager Tax Law out in California. He'll be joining us, and he's been at the forefront just as well of voluntary disclosure and all the things going on. He's been really helpful in getting some interesting documents maybe the IRS doesn't necessarily want the public to see about how convoluted and disorganized their international compliance rulings are. Again, I want to thank Jack Townsend for posting this notice so quickly and letting us know. And if you follow the link, you'll see the entire procedures below. I would advise you to subscribe to my channel to keep updated to all this. This is all going to change as we're getting more and more. Just very exciting news, I guess, of a way. That there is some clarity for those who are looking to make an offshore disclosure. If you have any comments for you or your clients, please give us a ring, 203-269-6699. We are in Connecticut, but we serve clients worldwide, or send an email to info@irsmedic.com. This is Anthony Parent of Parent & Parent LLP, IRS Medic, and I thank you for watching. And yes, I will stop broadcast. And can I stop it? I won't stop it. Interesting. So if you're still watching this, I'm trying to stop the broadcast. Broadcast in progress. We'll stop it. First time going live. That's what's going to happen, right? And I'll just end it this way.